Welcome to Bears in Exile. Today is Sunday, August 26th, and this is the weekend market overview. Coming at you a little bit later than normal. Normally this is on Friday, but events transpired that would not allow that at that time. And looking at the Dow SPX 15A, UUP, FXE, GLD, SLV, and all the rest. Alright, well, Friday was pretty darn interesting. Ben came and rescued the market once again. And the market is looking forward to the Jackson Hole meeting starting Friday. And most people are assuming that QE3 is on the way. So, doing quite a bit of damage to the charts on Friday. It was looking like it was ready to do some real damage. But Ben came to the rescue. What can you say? Starting off with the Dow. On Thursday, we were saying that we're coming into the long-term moving average bar. And we were wondering how far into it would go, if it would run into problems. Definitely ran into problems in the form of Ben Bernanke. And up it went. Beyond that, we still have the bearish cross of the MACD. We still have the histogram ticking down, but it's losing a lot of momentum. Moving up on the CCI, the RSI, the fast stochastic. 14-day RSI moving average is still moving down, along with the slow stochastic. But overall, they did a fantastic job of shifting this sucker. So even though we have plenty still ticking down, it definitely is losing a lot of its momentum. Whereas the daily on Thursday certainly favored the bears. This is now proving to be good support, at least for the moment. So much more bull friendly now. I know that stinks, but that is what it is. So not bad on the daily. Going to the 60-minute time frame. What do we have here? Well, on Thursday, we said the 60-minute looked really good, and the daily looked poor. Now we have the daily looking not bad, and the 60-minute, we have the histogram moving up, MACD moving up, RSI moving up by the end of the day, 14-day RSI moving average coming at us from low, moving up, stochastics high, and the CCI also ticking up, getting pretty high. 60-minute doesn't look bad. It doesn't look great. So definitely a change since Thursday. Daily's no longer poor, and the 60-minute not looking bad, but not looking great. SPX, going to be more of the same. Not too much to talk about here. We did have the downtick resolve on Thursday. We said we'd need to see what happened Friday. That's exactly what happened. Ben came to the rescue. And you have slight movement down on most things similar to the Dow, and a few things already starting to turn up, just like the Dow. No need to rehash. So daily, not looking bad, and the 60-minute pretty wishy-washy. Here's possibly the tell, which really stinks for the bearish perspective at the moment. We said on Thursday that we're coming into the long-term moving average bar. We'd probably have problems. This would be the spot for problems. We ended up with a little double top thing here as it kissed the lower price consensus level. Friday backing away completely. Very bad for the bears. We still have a slight bottoming area here, but this is not good positioning of the candles. The stochastics attempting to turn already. They're in disagreement. CCI turning down, RSI turning down. Still have the bullish cross of the MACD, tick up on the MACD histogram, but overall, not looking good on the daily. Not at all. So you might think, okay, we had a big retreat. 60 minutes should look better, right? Well, here you had Ben's efforts. And what do we have here? We have a slight bottoming area appearing in the heat map. It is not significant enough yet to really mean anything. We have the 14-day RSI moving average moving down, stochastics moving down, CCI moving down, RSI moving down, histogram moving down, histogram, and the MACD moving down. 60-minute on the VIX looks bad. We should have some kind of support here at the $15 level, but if it doesn't bounce there, in for some pain. So, bad for the bears. Going on to TNA. We had that downtick a few days ago. It resolved on Thursday. Said we have to see what it wants to do next. Ended with a fat body spinning top. Indecision. Still have movement down on the CCI, RSI, stochastics. MACD still ticking down. We do not have the bearish cross yet. MACD histogram ticking down. 14-day RSI moving average. The only one moving up. So overall, more bearish than bullish on the small caps, but we really need that bearish cross on the MACD, and until we do, I am a little bit leery. Certainly there's a lot of optimism leading into Bin's speech or meeting starting on Friday. And the 60-minute time frame. Any real difference here? Actually there is. We have the stochastics in disagreement, pretty high. The CCI ticking down, the RSI ticking down, the histogram ticking down, MACD going sideways. 14-day RSI moving average, a slight tick down. 60-minute does not look good for TNA, not good for small caps. Are they going to be enough to drag down the market? They haven't been the last couple of weeks. So I don't know why they would all of a sudden start now. And UUP, the dollar. This is pretty cool. We had this massive move down. We were noting in the daily running thread and in the nightly videos that the move down did not carry the market the way that it should. The market has been down during this big down movement. And conversely, if sentiment is changing, if this is decoupling in the way that we would like, bearish perspective, move up significantly in UUP should trigger the market to go down. Should. On Friday we got an uptick on the dollar. Excellent. Excellent, excellent. Gives us a target up here at about 22.57. We're definitely in a bottoming area. We have essentially everything ticking up with the exception of the 14-day RSI moving average, which is low and going slow, and the MACD itself. This is very nice. I like this a lot. And it got right to the 200-day moving average and appears to be attempting to bounce off. It came down and it kissed it and it reversed. I really like that. So, UUP, very nice. 60-minute on it looks very nice as well. Might as well take a quick look. And while it is coming into the long-term moving average bar, we have everything moving up. Very nice. As long as it can take out this previous high from the 24th. Actually, that's Friday. I'm getting confused. As long as we can take out Friday's high, then going into the gap should be expected. But yeah, long-term moving average bar, 60-minute time frame. I don't put that much faith that it'll be able to stop it. We have an uptick in the daily. So, VIX bad for bears, dollar good for bears. Very interesting. FXE, the euro. We almost, well, if we blow it up enough, it is a downtick on Friday. We said that gapping through the long-term moving average bar is a no-no. that it is unnatural. It would appear that we'll have a down move back into the bar, which it should suck it back into itself. Takes us down to around about 123.20. You can see that all the indicators are either turning over or ready to turn over. We have a definite topping area in the euro. I like this very much for the bearish perspective. Very interesting. Currencies versus the VIX. The VIX has been wrong quite a bit lately, and we'll see if it is again. CompQ, the NASDAQ. We had the downtick on Wednesday. It almost resolved once again, not quite. It is bullish engulfing on Friday, which is good for the bulls. Definite topping area. Looking for the cross of the MACD to go bearish. We don't have it yet. MACD histogram ticking down, RSI ticking down, CCI ticking up, stochastics definitely heading down, and the 14-day RSI moving average still moving up stubbornly. I'm sure that a lot of this has to do with this sucker right here, Apple. They won that big court case after the close on Friday. They were trading at 675 last I checked, so it could be enough to break out the all-time high once again and provide further support for CompQ. Beyond that, you have the histogram still ticking down. That could change tomorrow. MACD up, RSI down, CCI down, stochastics mixed and up on the 14-day RSI moving average. I am still hesitant to say anything bad about Apple until we get a downtick in the short-term moving averages, which we have not had all this time. And JP Morgan, the most powerful bank, the most important bank. We said we were having problems in this area, and look at that. It pierced the 200-day moving average once again, ending with a spinning top, and everything appears ready to roll over. Stochastics are on their way down, CCI is on its way down, RSI is on its way down. We don't have a bearish cross on the MACD yet. We've been waiting for it for weeks. Gets close and bounces away. MACD histogram ticking down. 14-day RSI moving average, a change. We noted this in Thursday's video of it going sideways high. Ready to roll over, assuming we don't get a reset of the secondaries. So, daily JP Morgan. I think it looks bad. But, yeah, we'll see if that's right or not. XLF. Financials as a whole. We had the downtick on Wednesday. It almost took care of it on Thursday. We resolved it on Friday. Downticks work. Beyond that, still in a topping area, not as severe as before. And most things, very similar to JP Morgan, appear ready to head on down, but more hesitancy on banks as a whole. So very interesting. I'll be very curious to see what we get on Thursday. Definite negative divergence in the daily, which we've talked about in the past. And USO oil. We had that downtick on Thursday. We have yet to resolve it. We still have 3 market days to do so. And it looks like everything is ready to roll over. Everything pointing down or about to point down. Very good for the bears. So all these signals which are favoring the bears versus the VIX. I'm not sure who's right. Somebody's right. And I guess, GLD and SLV. GLD. Man, look at that in the heat map. Massively overdone. We have a rollover in the CCI. We have the RSI ticking down. Stochastics in the 14-day RSI moving average are holding high. MACD histogram still moving up. This is extremely questionable. So, extremely questionable. Spinning top on Friday's close. Be very curious to see if this one can get a downtick soon. We have so much excessive separation here. I mean, the downtick would be really sweet. It'd be down here at like 158.5. Very nice. But, man, it's doing a really, really good. Really good. And SLV, very similar to gold. Massive topping area in the heat map. Having problems with the 200-day moving average. And while most things are pointing up, they sure are high. Just looking for a downtick. Downtick is going to take us somewhere in the range of, well, if we get it soon, like 28.1. And that's going to do it. Sorry for being so late for this weekend overview, but couldn't really be helped. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.